Attention, traders and investors. It's been a lot of excitement in the market for a while now. Eyebrows on the rise and even some at the edge of their seats. But on this side of the world, we stick to the facts in the chart. Like I always say, we're not trying to fix it if it is not broken. In other words, let's keep it simple. So having said all that, let's proceed to the facts in the chart to see what the chart is screaming about.
So here we are, Bitcoin US dollar index, and today we are on the weekly time frame. So before now, our last stretch was at $126,000. But before now, we had two tops. The first top was at $124,000, and when this was established, the sellers set into the market and began taking profit, and this bled us down to the low $107,000 level. And quickly, without delay, buyers came into the market with temporal momentum, and this pushed the market back into its last stretch, which is $126,000. And when this was established, a market chart pattern formation was formed, and this chart pattern is referred to as double top, and this double top and normally refers to as market reversal. And when this double top was formed, this bled the market down to previous support level, and when the buyers could not hold back the market, the sellers further pushed it down to the low 80s. And when this market level was established, quickly without delay, the market set into a bear flag. And this bear flag, normally when when the word bear flag is mentioned, it normally consists of either two touches at the top and two touches at the bottom within the bear flag, or at best three touches at the top and three touches at the bottom within the bear flag. And this and the high of this bear flag got us up to $97,000. And afterwards, the smart money set into the market and began taking profit. And this profit taking further bled the market down up to 60,000 level. And again the market set into a bear flag formation, and this led to our second bear flag formation. As usual, buyers set into the market. And a momentum came in as well and began pushing the market upward. But here comes a catch. The market was pushed up to a resistance level, which was previously our support level, which could not hold, and that level was the 80,000 level. And as at this point, the market began losing momentum again. Normally, whenever you realize a candle formation forming a wick at its top, what it simply signifies is that sellers in the market are beginning to take profit, or buyers in the market are beginning to take profit whenever you realize a weak formation at the top of a bullish candle. So what this tells us is,
One may ask, what is my takeaway in the entirety of the analysis done so far? Well, before anything else, let me put this out there. Ladies and gentlemen, there are no certainty in the market. As a matter of fact, the only thing certain in the market is that there are no certainty in the market. But with all things put together, we stick to the most probable facts chart-wise. Because men lie, women lie, but the charts don't lie. In this premise, market structure 101, We need to break and close above the $97,000 zone on the weekly time frame at 11:59 UTC with a followed up weekly candle close confirming a change of structure on the new found support zone, that is, turning the previous resistance zone to a new support zone, thereby creating a new higher high. Until then, the entirety of this rally from the low 60s will be nothing more than a bear market rally, and a bear market rally will eventually become a failed rally, and a failed rally at most chances is going to send us back to the low 60s and probably beyond. So upon my submission regarding the BTC market, this is my stand until proven otherwise. Again, men lie, women lie, but the charts don't lie. Until next time, I remain Musa, your guy. Peace out.